Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. How is everyone doing this morning? I am. Anybody else feel tired already? Like from this market? I'm already tired. Been up since four something, but I'm already tired. This is. We have patterns though, so that's a good thing. Always like when we have patterns. Yo-yo Wednesday Waka. Hey, Mike, am I seeing a double bottom? We'll take a look at this. See double on 4 hour on NASDAQ. Double top. Yeah, there are double tops in play right now. That's what I'm focused on. Nice little potential reversal patterns. Good morning, Patrick. Lauren, good morning. Good morning, Jacob. Christo Bob was talking about housing where I live in Forsyth County, Georgia, North Metro Atlanta. We are booming new houses and shopping megaplexes. We are at 2003 levels of growth. Thank you for sharing that. Hope all have a cracking day. It's going to be odd, huh? Let's see. Good morning, options 22. Good afternoon, Sashi. Christo super long this morning. Watch for the potential reversal patterns. Sashi's not tired. Anissa, good morning. Super tired eyes. Well, let's see. Now we got all that out of the way. Let's get to the market. So far. Mortgage applications down substantially. Building permits still coming in at a 1.4% growth, but minor housing starts month over month down. But that's pretty much it for the day besides the Fed Beige Book. The Fed Beige Book coming out at 1. Doubt it will be tremendously market moving, but we'll see. Plus, if you're an oil trader, remember 9:30, all the EIA numbers. And we have Kashkari coming, speaking again at noon Central. Also, Kashkari yesterday evening said that that the Fed doesn't have to stop at 4.5, essentially if inflation's still running high. So we have that going on. Good morning, Martinez. And then we have after the close, we have Evans and Bullard. So yay for more Fed speak. Market map, pretty mixed to down this morning. Did check in on Abbott. Alley missed. P&G was up. They beat. And then now I'll have to take a look. If something else missed that was important, but you see PG was up with their earnings beat. So they are still able to pass things on. Abbott was a miss. That was down big. And then you had Alley, the bank / credit / financial institution that was also down big. So you got that slight weighing on it. Real estate, slight up this morning. Communications. See, these are when now we're continuing with what happened. Oops, clicked on something wrong. When you have real estate and communication services, still, those are very weak sectors, as you know from the sector analysis, and those are still the only thing holding up this morning. No. And those are the two I'm avoiding like the plague. Still 75 basis point at 94%. We are still in negative gamma with the zero gamma flip at 38.58 approximately. That is an area, so do keep that in mind, but still in negative gamma, especially if we down trigger some of these topping patterns. Negative gamma, we could see that acceleration back to the 3,600 area. Fear and greed still only in fear mode. Here's what I was talking about. PG did beat, Alley missed, Abbott missed. Those are the big ones I was looking at. Keep in mind, Tesla after the hours for all you Tesla traders, hard to ignore. I am going to be checking in also on Alcoa. Other than that, not a lot of market moving stuff. Tesla's probably the biggest market moving because of the cap, because of their cap size in the S&P. and NASDAQ. So that's where we sit right there. So, by the way, if you are new here, I don't do this all the time, but please do consider subscribing, ringing the bell, and hitting that like button. Thank you for attending the channel. Let's see if this camera, there we go. I can do this. Still on the backup system. Multi-cameras, though, going. Doing some tests for when we making some modifications for the channel. All right, what am I watching? So, remember, not a double bottom in the S&P last evening, and I went over how I picked the targets. Second target hit at the end of the clear path, and done with the rollover. Not yet taken out the 87.5, but now we have reversal probabilities. This was not a double before, but this is a double. So 36.97.25. Need at least a 1 hour close. Would prefer 4 hour close below 36.97 on a trade below. With momentum, it can be front run, but especially need that rollover play and the close to hold it. So that is very key. Right there, those targets, 36.57, 36.37, 36.17. So that would be on the path to return to the 3600 area. Also remember, I have the retracements up here. So would watch for key support between the 50 and the 62.5. Third target still in there. So that is a key area should we sell off that I will be watching for on the daily cycles at the top. So this would be the rollover with weekly still going up. That's where we sit with that. Was what asked about there's no on the futures, there's no double bottom. You were wondering on the spiders. On the spiders, this is not a double bottom. It is not reversing enough of a move. Okay? The spiders, you still have a little gap left behind down here. Also, do keep that in mind, 36.82. It held at the 87.5 level yesterday and the prior key support area. Well, resistance becoming support. Below that, if you do get the bigger sell-off, by the way, in the spiders, if we do trigger these doubles, watch 364. Below 364, you have another key gap. All right? So no double here. Watch the gap fill, then focus on 364, and this just isn't necessary for today. We have another gap fill, and the key 62.5 is 358.36 on a closing basis. So those are your downside on a recovery move back up. If these doubles do not trigger, or they confirm but do not trigger, your key resistance is about 372. And then you're into a clear path, and I'd be watching back to 375, not just for today, as long as those doubles do not trigger. The NAS, this was a double bottom yesterday evening. See it right here, especially on the 15. We covered this in the afternoon session. Coming up first and second targets, creating, yes, this was a double top reversal at the second target, for anybody wanting to know. And the first, second, third targets hit and then continued down. But what else did this do? What else did this do? This set up another potential double top. This is a potential still. This retraced enough. See, above the 75. So we have the potential double top. And this would take us back down. Let me just reverse this real quick. Let me take off these harmonics and see with the overall play. I want to structure this trade appropriately. Check something out here. Now we can use the aggressives. Key trigger 11,083, 10,909, 10,822, 10,735. Key area I'd really be focusing on is the second target with the 62.5, but you get a close back below that 62.5. And when I talk about close, 4-hour or daily are a lot stronger. So this is interesting too. This is not confirmed or triggered. If we do hold these levels and rotate back up, it could still become a triple top, which slightly favors a continuation pattern. So this, again, not confirmed or triggered. On a front run, I would need trade with momentum and prefer a rollover, a retest, and a rollover. Remember, the rollover area I watch, if we start breaking below that, is between the candle bodies and the trigger point. For the Qs, by the way, this, remember we had the double trigger in. This is technically valid, though, in the Qs. So if this does move back up, and this is why I prefer the analysis of the futures, because the futures already hit the first and second target. And so you'd see this in the after hours data, but you can't get reliable patterns in the Qs and the spiders pre-market and after hours data. You can because the futures and the depth they trade, but you cannot in the Qs and spiders. That's why I do the analysis on the futures. Key support 260, 269, 268, 70 to 269. You start breaking below here. Next target is the gap open 266.84, and then we have a gap play. Would not ignore 264.85 area before the full gap fill. So those are the downside. To the upside, you can still use, if this thing snaps back, it's probably going to be I'm going to take this off because with this open, we're going to have a triple. So yes, before this open, I should have mentioned that now we cannot use those targets. However, on a rally back above 272.50, I will still be using 275, which is a prior partially gap filled with that gap open yesterday, but that's still going to be some pretty key resistance between 275 and 275.80, and then yesterday's high. But so far, we'll be watching to see if those doubles trigger. Well, I will be feeling more bearish if these doubles trigger. Again, they have not triggered or confirmed even yet. So we do not, this is more like a head and shoulders in the Dow, but it's messed up because of this. So this downward slopes it. So you can't use that, but let's just see. Remember, the daily double did trigger on the Dow. So these, and since we have a triggering pattern on the Dow to the upside, this is where definitely use the conservative patterns, and this would not stop it out. 3,091, so 3,100, 29,970, and major support 29,845 area. Remember, on the run up, the 62.5 is the key level, 29,476. So very mixed messages, especially in the Dow, but the Dow potential double top not yet triggered. Russell. That's why we have to measure it out. Was this a double? No. No, it was not. So even though the Russell's broken down, Russell also fully filling the gap, which technically wasn't filled yesterday. Russell breaking down, but there's no topping pattern in there. So this is where I will use just a retracement harmonics. And we have this little support shelf. So 1732 roughly. 1732 and then 1715 will be my key support areas on a rally. We have sorry, I did not move up that harmonic, so I gotta change those levels. Hold on. I messed up. Gotta fix it when you mess up. You gotta fix it. Let me revise those levels. So it's now the 1738 level, which is this little area for support. We break below that 1719. On a rally, 1753 to 1756, 1757 areas key resistance. So cannot get any bullish mode until we get back above there. The DAX triggered the double yesterday with a pullback move, my major key support, and still completely valid. Not hit the first target yet. Pullback support 12,580 area with the first cross of the daily rotation zone. Target still 13,076, 13,254, the primary targets. Notes breaking down, retesting the lows. This technically is still, this did not get high enough to form a triple bottom. This is still part of the same bottom. I am watching, though, after this breakdown, as I talked about, below 110.17. Retest of the lows. I'm expecting the break 109.24.5, 109.05. Key resistance now is back to that 110.17. We'll be keeping a close eye on this because breaking down here is not bullish for the markets. Also, dollar index, strong rotation back up, dollar wrecking ball back in place. Still key resistance on a closing basis against this 112.55 area first target. Pull back now, your major support back at 112.20. So I will be keeping a close eye on the dollar index. Why? If it resumes its up move, which probability state it should, will be negative for the market. VIX. We'll be watching for acceleration into the open above 3150. Above 3150, 3240 is the next key point, then about 33. So acceleration up in here, that will be keying off the potential bearish breakdown. I can't get overly bullish until we start breaking back below 30.57. Crude, nothing yet from key areas. Yesterday, we did close below the 62.5, so we should see a return to the 78.42 area. That's about it. Going on with crude, let's peek in at Tesla. Earnings again today. The double you see here on the 4-hour was confirmed but did not trigger. Not trigger, and you had the collapse. Pre-market, trading down slightly from the close. But the key intraday levels I will be focused on is right around 213.50. We start breaking down from there on a closing basis, then I'm going to target the recent low area again, 207.60. Other than that, the major overhead resistance is still this untriggered double top breakout point 216.26 with the declining 4-hour rotation zone, and then everything above that is a earnings play. So that's about it. So it's besides still being a story stock earnings play today, from my perspective, it's sit on hands. Overall, still long-term bearish. What else? We saw the dollar index Euro pulling back, but no great setups just yet in the euro. So, nothing for me. And pound still consolidating. Why you might be wondering why are these targets on here? Because on a shorter term basis, you can still see them going into the wicks, and this still is valid on a 4 hour. So that's the only thing I'm eyeing in the pound. I'm seeing a lot of earnings beats. Are the estimates generally lower this quarter? Yes. They are. They were revised down substantially, and there are some beats I want to see going into. There's also some pretty substantial misses. This was a beat. P&G with the gap. I'm still going to watch for a rollover gap play, but you see this was a beat top and bottom line. P&G, but there'll also be potential another rollover play for that. But yeah, stuff like Alley, big miss here. Big miss. Gap down well below support. So on any rally, an Alley is a rollover play back to key resistance and then for a rollover play in that. But you see major support being broken and Alley just continuing the decimation play after the pretty substantial double top pattern that played out below the weekly, still focused on much lower prices in that. What else do we have? So Alley was a miss, but it's going to be interesting next week with a lot of the big boys reporting. And then Abbott, that's the one I forgot, was also a pretty hefty miss, but still holding up back at that $100 level. But a pretty big miss right there on a gap down. There's no great plays in Abbott, though, unless we really break below the most recent lows. Or back to breakout above about 106. Netflix. I am going to be watching for the next Netflix gap fill. Coming back down, trading pre-market 265. That's roughly this very key level. So I'd be using the gap harmonics. And since we don't have the open yet, roughly but if market weakness, if we trigger those doubles, I'll focus more on that gap fill harmonics with Netflix. If the market holds up, going to be very patient. Then it turns into a longer fill gap fill. But roughly the key area I will be watching comes back in with resistance. So if there's a short-term trigger, this would be front running. It would be a return. I'm just estimating where the 62.5 would be, but that's going to be right at the prior resistance becoming support. So shorter term, this will be my key area. I have to refine these going into the open, but 253 to 250 area. On a rally, if we do have firm market, I will still be reusing, even though we traded up through here post market yesterday, 274.30, then 279.61. So there's your Netflix. Both sides. And my thoughts on it. No idea. Again, don't make short-term conclusions. We've had some buy programs kick off on the open, some strong buying off the open. That has quickly been reversed. So I will be looking at the tick, but remember, if we do get that again, watch for that pullback to zero. And if the tick nature changes like it did yesterday, we could easily start triggering those doubles. I got Netflix. Ally. Is that how you pronounce it? I never know how to pronounce stuff. XOM. By the way, you do have this mini little double. If oil keeps pulling back, watch for this in XOM. Because you have a number of gap fills too. Other than that, this is a fantastic area. If it does get the breakout to the upside, it's right now in no man's land from my perspective. Long term, still bullish. The only thing is, if depending on your time frame, if it does trigger the doubles, it can be used as a stop level and watch for the bigger pullback. So that's what I will be watching on XOM. 96.75 is the trigger point. Good morning, PMG. You're welcome, Strategy. I already went over Tesla. Could this be another neckline test on the ES? Yes. That's what I'm watching for. I need the, unless there's momentum off the open, I need the confirmation close for the topping pattern. Neckline, it's not really a neckline trade. It's just a key. We remember I talked about this yesterday with reaffirming the key resistance becoming support, and now we've reaffirmed it again. However, we do have the potential topping play if we do break below that, which is really nice because now I have great targets and we have the higher probabilities. Not confirmed or triggered yet. With that, I need to jump. Let's just see so far. Let me just look at the tick real quick. Tick. All right. See, we got the sell and the open. So now what am I going to be watching? For the nature trade, this is a pretty hefty sell going in off the open. So my first thing is going to be, first is above minus 400. Then I'm going to be watching the 0 mark. So that's what's for the nature of the key. And if the tick does not confirm, then I will be watching for the rollover play. By the way, not a 5-minute double, 1, 2, 3 bottoms. So you can't use those targets. But there's plenty. There's not great trading into any clear path up here yet. Keep in mind, on a shorter term basis, 37.24 is some pretty significant resistance. With that, let's see where our VIX opened officially. Nothing major yet. So I'm going to give this a few minutes to see how we gauge, but still not a smashing buyback or rally back yet. So not in the overall market tick, not a lot of supporting strength just yet. So this will be watching to see if all this rolls over going into the open. That's where we sit. Dow, we can peek in on the Dow. Dow is the, remember the Dow also did trigger that double bottom pattern, and the Dow's been holding up the best. So, you know, don't, even if this double top does trigger in the Dow, it does not invalidate the bottom, the double bottom. It would just be a pullback play. So we shall see. I've got, let me peek in at the notes. Still holding the support. And dollar index. Dollar index going to be pulling back. So if this keeps pulling back, choppy to potentially bullish at least for a bit longer. Going to be watching this key support back at this 112.20 area. The dollar has to get back above about 112.50 before we can turn. Before I start watching overly bearish, and now we're getting the move back up with dollar breakdown. All right, now I have to jump. After I look at the tick, all right, now we're getting the tick back to this minus 400, but really needs to see some stability back above zero before get overall bullish. With that, we can look again at the, yes, it's the 10-year, the yield is back above 4. Thanks for putting that in. I shall talk to everyone later. Thank you for watching. See, if something major comes on, I'll have to come on at lunch. If not, it'll be after the close. Bye for now.